This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's independent refiners are set to cut production in coming weeks as a Ukraine-driven surge in oil prices squeezes margins, with a jump over $130 a barrel unnerving producers, trading executives and analysts said. Production curbs at the so-called teapot plants that account for a fifth of China's crude oil imports will reduce purchases by the world's top oil importer. In a sign of less buying, Beijing has already urged state refiners to halt gasoline and diesel exports in April to ensure domestic supplies. The teapots, mostly located in eastern Shandong province, had already been expected to operate at lower rates this year after Beijing slashed their import quotas, but a spike in global oil prices to 14-year highs amid the Ukraine crisis is piling on pressure.
Oil prices bounced on Thursday from a sharp drop in the previous session after the United Arab Emirates backtracked on statements saying that OPEC and its allies might increase output to help to plug the gap in exports from Russia. In a volatile market, Brent crude futures were up $5.43, or 4.9%, at $116.57 a barrel by 10:42 GMT after trading in an $8 range. The benchmark contract slumped 13% in the previous session in its biggest daily drop in percentage terms for about 2 years. U.S. West Texas Intermediate, WTI, crude futures were up $4.49, or 4.1%, at $113.19 after trading in a $7 range. The contract had tumbled 12% in the previous session in the biggest daily decline since November.
Moving on to the top news in the energy sector.
European Union leaders will grapple on Thursday with how to reduce their reliance on Russian energy and strengthen political and moral support for Ukraine in the face of Moscow's invasion, but will rebuff Kiev's appeal to be granted rapid membership. Gathering in the opulent Palace of Versailles near Paris, the 27 national leaders will also look at shoring up their defenses and economies as sanctions on Moscow start to bite and more than 2 million Ukrainian refugees flee into the EU. Latvian Prime Minister Krišjānis Kariņš, whose country has a border with Russia, said Ukraine should be granted EU candidacy status, while acknowledging this was only the beginning of a long and difficult road.
U.S. motorists, already dealing with a steep rise in spending on fuel as the economy rebounded from the coronavirus-induced recession, are now dealing with surging gasoline prices after Russia's invasion of Ukraine. However, coming into recent months, U.S. consumer spending on energy and gasoline had been near historically low levels, even in the years preceding the coronavirus pandemic. Global energy market prices have skyrocketed since the invasion and subsequent sanctions on Russia from the United States and other countries. U.S. gasoline prices hit an all-time high while global oil prices surged to 14-year highs.
Next, we have the top news in metal markets.
Aluminium rose by more than 5% on Thursday, clawing back the previous day's losses as uncertainty over supply from Russia ramps up price volatility. Benchmark aluminium on the London Metal Exchange (LME) was up 5.7% at $3,530 a ton in official trading. Used in transport, construction and packaging, aluminium prices jumped 20% after Russia attacked Ukraine on February 24, reaching a record high of $4,075.50 on Monday before slumping to $3,300 on Wednesday. Russia supplies about 6% of the world's aluminium. It is also a significant producer of other metals as well as gas and coal used to power smelters.
Gold bounced above the $2,000 an ounce level on Thursday following a sharp correction in the last session as a lack of progress with the Russia-Ukraine talks reignited a shift into safe haven assets. Spot gold rose 0.7% to $2,004.89 per ounce by 12:03 GMT after tumbling as much as 3% on Wednesday. U.S. gold futures were up 1.2% to $2,011. Gold bulls have shown little qualm in catapulting prices higher on signs the Ukraine crisis could drastically worsen the global economic outlook, Han Tan, chief market analyst at Xinity said. A rush to safe haven assets earlier this week due to the Ukraine crisis powered gold prices to near record levels hit in August 2020. We will now look at the top news in the agricultural sector. The domestic stockpile of soybeans will be smaller than previously thought as crop shortfalls in Brazil and Argentina boost export demand for U.S. supplies, the government said on Wednesday. The U.S. Agriculture Department also raised its outlook for U.S. corn exports as Russia's invasion of Ukraine halted shipments from the leading global supplier. U.S. wheat exports were cut despite the conflict involving those two countries that together account for close to one-third of the global market.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.